You have to know when to hold 'em, know when to fold 'em, know when to walk away, and you got to know when to run. Hi, I'm Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of November 13th, 2016. Well, the election is behind us, and obviously everybody knows that President-elect Trump won the election. Surprising to many folks. And what's really surprising is nearly everyone in the press was predicting a market fall, a crash if Trump was elected. And here we are looking at what's called the Trump bump, a series of couple of days of the market going up pretty sharply. So what's going to happen next? Boy, it's anybody's guess. It's anybody's guess. What we really have to rely on is technical analysis. The reality of price and longer term price patterns kind of transcends short term emotion and speculation and all that kind of stuff. I like to equate it to flying an airplane on instruments. You know, when you're in poor visibility, you have to trust your instruments and not, vertigo and fear and all that kind of stuff, which could get you into trouble. But you have to trust the instruments, the reality of what's happening. And the reality is unchanged that we're at the top of a very long bull run, 7.5 years, and the market really still continues to look like it's consolidating. Now, could we go take out the all-time high that was put in last August? I think that's possible, but I don't think it's going to be big. On the S&P 500, I would be shocked. And the technical indicators do not support us going up above, 2250, 2300. And there's still a possibility that we could reverse down and not put in a new high. We'll have to wait and see. What is real is there is a correction coming according to the instruments, and it's going to be pretty big. It's not a catastrophe. It's part of the normal ongoing market cycle. It looked like it was getting started. We got this Trump bump. Is it going to reverse down and then get going? It could. Could we go put in some incremental highs? Yeah, as I said, we could. So this is a time, like I said, to know when to hold them, know when to fold them. So my trading right now is based on specific sectors and specific instruments that have really, really clear patterns, clearer than the broad index here on the S&P 500. I'm just staying focused on reality and only taking trades that have really, really good clarity and really, really good proven trends and high probability for their next move. So I think that's the way to trade right now. It's a good idea to be really careful. It's not a bad idea for trades to take a little bit smaller position size. There's an axiom in trading or investing, sell until you can sleep. And I think that's good advice. Don't take trades that are going to keep you up awake at night. And if you do take positions, maybe take smaller positions so if it doesn't work out, the loss is small and manageable. So that's where we're at in the market. Quite a bit of uncertainty. We do have in December the FOMC meeting coming up and interest rate announcements. Will they do something before the inauguration? Before potential changes in the leadership of the Fed and board members? We'll see. We'll see. And I'm sure as announcements come out and information comes out about, the Trump transition team and policy ideas and all that stuff, short-term news is going to cause some volatile moves and some emotion in the market. So it's just good to be prepared for that. And again, only be trading things that have really, really clear setups and in sectors that have clear trends. And that's what I'm doing, and that's what I would recommend to anybody trying to trade through this season. Following that kind of methodology throughout the year has kept us very profitable, even through a pretty challenging year that showed a big decline at the beginning of the year, move up, and then Brexit, and then another move up, and now some consolidation around the top. So stay tuned. I'll continue to provide updates, but for now, in terms of the broad indexes, a little bit uncertain. Again, we could go on to some new highs. I think they will be small, and we, again, at some point, and it could be a little bit of time out, we'll have to see, a correction will get started, and there will be some great trading opportunities there. Before we wrap it up, let's just take a quick look at gold and oil as always. So here's the gold daily chart, and I've been saying since back early October, late September, that I thought the top was put in on gold. and that we're going to continue down and sideways. And so that's certainly happening. So gold's not really tradable at this point, and I would stay out of it, and I'm going to stay out of it until a clear trend has developed. And again, once the big index corrections do begin some point in the future, there may be some upside in gold. But for now, I'm leaving it alone. Here's oil. Oil's tough. We just took out the last low here and closed below it. The short-term likelihood of oil resuming its rally upward, the probability of that has diminished significantly, and now the picture is unclear and just volatile. So not trading oil-related instruments at this time, waiting for further clarity. We could go on to new lows here, or it could reverse. It's 50-50, so when that's the case, that's not good. I like higher probabilities than that. So for now, I'm just going to wait and watch on oil. Well, that's the update for this week. A lot of uncertainty. There are sectors that have clarity, and that's where I'm trading. Thanks, and as always, send your comments or questions, and I look forward to responding. And I look forward to giving the next update when perhaps we have some better clarity. Take care. Trade safe.